Hello and welcome to this, the Books Crypto Club weekly catch-up on Zoom. It is Sunday, the 28th of August, 2022. And as always with these sessions, we're going to be talking about whatever is going on in the crypto world that is of interest to the people who come along. Some weeks we talk about Bitcoin, Ethereum, the altcoins, the major market moves, and so on. Other weeks, we may talk about NFTs, DeFi, ICOs, STOs, a whole range of other initials that keep coming up. For those who are novices, this can be a really useful session to come along and ask questions and share your experience or find out more about this kind of space. For those who are experienced and have been working on projects or have organizations, this is a great opportunity to come along and talk about your project. Talk about what you're doing, talking about what the company is up to, and how people can learn more about it. We run these sessions every Sunday evening, 7 p.m. UK time, and they're open to novices and experts alike. If you'd like to join a future session, then there's a link to the meeting invite in the comments below. As always, please do remember to click on that like, even better, subscribe, make a comment in the comment section, but most important of all, come along to a future session, open to everybody. So with that, let's see who's going to come and join us today. Hey, man.
Hi. How are you?
Hey, good, thanks. How's it going?
Yeah, all going good.
Enjoying the world of crypto at the moment?
Yeah, I guess with crypto, it's never a dull moment. There's always something that's trying to take crypto down, and new projects trying to take it to the next level. So, yeah, non-stop battling happening. So,
yeah, it was interesting today as well. Bitcoin, in particular, kind of had a sudden drop, which it's recovered from quite nicely. So, no doubt,
yeah,
the press will be picking up saying, "Oh, Bitcoin's died yet again."
yeah,
always entertaining that. So, are you watching any crypto events in particular at the moment?
I guess in particular, I guess just really keeping up to date with the merge since it's happening within a couple of weeks' time.
Mm-hmm.
And I guess just seeing what generally is happening, I guess, in terms of the crypto winter. I guess I'm looking at the general markets as well, stocks and just the general economy, because I'm sure that's going to have an impact on crypto as well. So once we see the markets improving, there's a correlation between crypto and stocks. So you'll see it.
Have you seen any evidence of an actual correlation? Because a number of years ago, there was an argument that there was an inverse correlation between crypto and traditional markets. And there was a view by some people that crypto was going to be an alternative asset class that gave a bit of variety and variability from traditional stock shares, gold, commodities, that kind of thing. And then it didn't kind of play out that way.
Yeah. So I guess from my experience, that's something that I did used to see. As you said, there seemed to be a bit of an inverse relationship.
Yep.
But I think what I've noticed recently is that now, since you have a lot of retail investors in cryptocurrencies, whenever they're selling off their assets, which tend to be stocks, and now since they also hold cryptocurrencies, they're selling off both those things. So I've noticed any day where the stock market has gone down quite a bit, you've also seen that same trend in the stock market in crypto markets as well. So I wouldn't say it's 100% correlated at this stage, but it is coming along with one another, and we will see a convergence just since it is now another asset class. So,
and I think in a way it's almost a sign of maturity that it's beginning to conform with everything else. So yeah. Whereas you've always got the thing of in times of fear, people tend to move away from the stock market and towards gold and silver as a safe haven. And it was thought that crypto was going to act as that safe haven as well. But it seems to be actually correlating more with the mainstream prices than it does with the safe haven ones. But there's no absolute correlation between them, I guess.
Yeah, because I guess with gold, at least one thing about it is it's in times of hardship is when it tends to maintain its value or even sometimes go up during those times. Whereas I guess crypto, people just see it as a speculative investment now from all the retailers. And I think that's why it's converging alongside stocks, since that's also speculatory investments as well. So yeah, maybe there'll be certain cryptocurrencies which might be viewed as a bit of a hedge similar to gold, but I think in general, people just see it as an investment where we're hoping for the price to go up. So when the markets are going down, they're selling their assets and getting rid of crypto and stocks.
I think you may be right on that. Let's see, we've got Sebastian has joined us as well. Hi, Sebastian.
Hello, Gary. Hello.
Managed to connect okay, that's good.
Sorry, what did you say?
You've managed to connect okay, that's good. Sometimes people, when they come in, have a few connection problems.
Yes, thank you. I've just had to fiddle with my audio a bit, but glad it's working first time.
Excellent, okay. Have you been on the call before, Sebastian?
Nope, first time here.
Okay, right. I think Aman, were you on last week, was it? Or
I was on 2 weeks ago. I wanted to come on last week, but I had last minute plans, so I had to just pull out.
Okay. I wasn't sure how many people come on and say with it in the UK, it's a bank holiday weekend, which I hadn't realised until it was a bit late, but very cool. So Sebastian and Aman, for that matter, welcome aboard. These sessions, to be honest, we don't have a kind of a fixed agenda as such. It's open to yourselves if you've got any questions you have. Depends upon your level of experience. If you've got any ideas or any thoughts, if you're working on any projects you want to share, that's fantastic. Entirely over to you. So I don't know, Sebastian, what's your kind of like experience level would you consider in crypto?
Well, I'm a specialist in software package ecosystems, and cryptocurrencies and blockchains in general are quite a bit of a distant topic in most spheres. But the recent Ethereum Merge announcement has got me all excited again, and so I'm joining to see what it's all about.
It's good because Aman was just mentioning the merge before, which is due to happen, is it early to mid-September? So it's just a few weeks away. And I don't know if either of you have heard, I think Vitalik gave a talk in San Francisco, I think it was earlier on today. I don't know if either of you have heard anything on that.
Myself, no, I didn't hear anything from that talk.
Okay, because the thing I'm finding interesting is whilst everyone's talking about a merge, there are still some people talking about some diehard advocates doing a hard fork and remaining with proof of work rather than going to proof of stake. And that could be interesting if you end up with this split of another Ethereum chain going on. So we'll see. But Sebastian, you talk about ecosystems. I guess the lovely thing about the whole crypto community I discover is that they are very much into ecosystem-based approaches. And when you look at things like Web3 and DeFi, that seems to lend itself to an ecosystem play. Is that what you're finding?
Yeah, so the closest thing that my area of work relates to cryptocurrencies with is the linked data and distributed web concepts. And we're in particular, I'm working as a volunteer in a project which is using linked data to create software bill of materials. Okay. And that can be used to make more secure software supply chains. And so you need an inherently decentralized way of describing stuff if the things you're describing are inherently decentralized.
Yeah. So are you using things like Accord standards to maintain consistency and that kind of thing?
Well, the current thing is RDF to represent the data. And then the level of trust upon that is outside of the scope of the project I'm working on. But people have been using transparency logs and very occasionally blockchains to store that information.
So I guess for people who are watching this who aren't familiar with some of the terms, RDF, if I remember correctly, is...
RDF, yeah.
Yeah. So that's what, real data formats? Sorry, realistic data formats? What's the R stand for?
It is resource description format.
Ah, okay. Yeah. So that's more at the almost kind of like HTML type level. Is
Yes.
that right? Yeah. Okay.
It's a if you imagine a typical HTML or XML document, you have a hierarchy of tags which have attributes and contents. RDF changes that paradigm, so you have a list of entity, attribute, and value pairs. So in my specific field, where we're describing pieces of software, you can say that package X has file, and then your file identifier, and thus create a web of information about software.
Okay, so that's more around like where you've got KVPs, so key value pairs, and you're connecting them, and then you're turning it into kind of a mesh. Is that right?
Yes, definitely. That's right.
Okay. I was just trying to make sure I understood it, so that other people, if they watch the recording of this, they'll understand it as well. So thanks for sharing that. And hey, you're joined by JT as well. Hey, JT.
Hi, guys.
How's it going?
I'm good. I'm on holidays, so all good, you know.
You on holiday in the UK or?
No, in Portugal.
Portugal. Okay. Very nice. Okay, so we're just having a general chat. The Ethereum merge is coming up in a couple of weeks. I'm just beginning to have a bit of a chat about. It's going to merge.
It's going to merge with BNB. It looks like it the way it's going.
I think that would be interesting. But I know someone shared a link earlier on with. I think Vitalik was talking in San Francisco. I guess yesterday, actually, if it came out today. And I think he was remaining confident, but I haven't had a chance to watch it yet. It'll be interesting to see where that goes, because that's going to be a make or break for Ethereum, I suspect.
It's not going to change gas prices, you know. People expect, oh, finally, I don't think nothing will change. It's basically just merging the existing infrastructure, really, which is quite weird the way they've done it, to be truly honest, you know. But I really don't understand. You know my opinion, Gary, about this. Anything that is hybrid, I think is shite, basically, you know.
But the interesting thing is going to be for the switch to proof of stake, because that's far more energy efficient, shall we say, as in you're not burning loads of energy doing mining and that. What that means is that it makes the Ethereum platform very attractive again. So for things like NFTs, where a lot of people were moving away from the Ethereum platform because they were arguing it was environmentally harmful, even if that wasn't necessarily true. It does away with that argument again. So we'll see where it goes. Well, I don't know. Yeah. Anyone else got any other thoughts about the Ethereum merge? What they think will happen to the market or anything?
Well, I find it intriguing that if the proof of work branch remains in use, then everyone's value, everyone's holdings have essentially been duplicated, and it's up to the market to decide how much they're going to cost. And that seems like a radical departure from traditional economics.
Well, it's happened many times in the crypto world, though. So if you look at Bitcoin, for example, Bitcoin has had several hard forks, which is why you've got BTC, BSV, BCH, Bitcoin Gold, various other things. So actually, this thing about doing the fork of a crypto, in fact, even with Ethereum, you've got ETH, you know, the main Ethereum, and ETC, which is Ethereum Classic. So actually, in the crypto blockchain world, having a fork and having two versions of the same thing is not unknown. So we'll see. And usually, as you say, the market decides which one remains the popular one and maintains the price. And then the rest of the market looks at what happens to the other tokens. Which is why it is, if you look at Bitcoin, BTC's at what, 20,000, or I think it's just gone up to $21,000 at the moment, whereas BSV and BCH are much more than that. So we'll see.
It also depends a lot, Gary, on the on the project. So, you know, the smart contract owners, you know,
Yep.
If there's a smart contracts that they can just basically stop any transactions, yeah, then that's it. You know, they say no, we're only going to ETH2. No other chains will be able to use. So they'll go. Whoever tries to do a clone at the chain at some point in time, yeah. Which can be done now if you really want. You know, anybody can do it, right? They actually Justin Sun already done, already forked, you know, and it means just if I'm I don't know, if I'm the Av guy who has the owner key, I can switch off straight away on that fork. I have smart contracts. It's very simple. So you're right. When it comes to it's going to depend on the market. I don't think anybody will respect any project out there or main project out there that is going to leave it enable multiple chains.
Yeah,
so that's
Sebastian, did you say you're working? Was it for an organization or on a project in this space at the moment?
Well, I was mentioning that we're kind of at the layer underneath. We're defining the data transmission format. Okay. But it's likely that a lot of people will want a level of trust on top of this. And that's why I see that in the future, I think a lot of people will be using blockchains or other kind of transparency logs to verify what they're downloading.
But were you talking about having the data layer? Are you talking in terms of developing standards for that? Or yes, having a repository or something like an Oracle?
Yeah, I should have mentioned that it's an open standard. Okay. And open standard for software, bill of materials communication.
Okay. So have you been looking at what they were doing with Hyperledger's project around trade finance, not trade finance, Walmart with the actually, sorry, it was the trade finance. I get the projects mixed up, where they were looking at doing bill of materials around supply chain for shipping and that.
That's very interesting. I haven't come across that, but Hyperledger, now you mention it, is actually a sister organization. And so I'll have a look into that. Thank you.
Yeah. Well, Hyperledger being part of the Linux open source foundation is very much into that. But they were doing some stuff using Fabric, I think it was, where they've developed some things where work with Walmart on the product traceability on the green products, so things from farms and that. But also in terms of things like bill of materials, there was a project, InsureWave, and InsureWave, which I think again is maybe Hyperledger based, was established through the insurance industry with Maersk Shipping. Maersk Shipping being one of the world's largest shipping organizations and shipping containers, where they were doing things like trade finance and insurance. And I think that was linking in with things like bills of materials and that as well.
Yeah, that's very interesting. I haven't come across that either. I mean, this is incredibly valuable just to come here and see the parallel universe to the one I've been working in.
I've found this so many times. You know, you even get it in the physical world. I used to go into WeWorks in London sometimes, and you talk to somebody and they'd say, "Oh yeah, I've been working for 6 months on this really unique project, which is a really unique idea, which is to do with, you know, tagging of photos on holiday or something, whatever." And I turn around and say, "Oh, okay. Have you spoken to the team on the 3rd floor who are doing this?" That happens so many times. So this is why I love the whole crypto blockchain world. Generally, if you're doing something, someone else somewhere in the world is doing something very similar as well. And it's great to kind of connect them at times. So it's like, say, you got things like the Accord Foundation who are doing things like legal data standards around smart contracts and having them consistent on a legal basis. Then you've got things, as I say, like Hyperledger Foundation and the stuff they've been doing on various projects around traceability and provenance, and then linking in with trade finance and that kind of thing, which is where bill of materials and parts and all this kind of thing come in.
Yeah, the key thing is how you can have a piece of data which can be verified from its signature, but it's the layer above that of verifying that it comes from the party you expect it to, which is a very tricky problem and something which has to be solved with a web of trust of some sort.
Well, it's interesting that I always say whenever anybody invites me to join them on a project or be an advisor on a project, as soon as they start talking things like identity management or authentication, I usually step away from it because it's invariably an absolute minefield. And it's surprising how difficult it can be to do things like identity, authentication, and verification of both people and objects. You know, and people always think, oh, it's easy, you know, you're a person, you know, I can tap you. It's really easy to prove who you are and what you are, and that it's like, nah. So
identity of the human actors involved was one of the most time-consuming parts of the latest revision of our standard. Okay. It probably took about 2 months of discussion.
Okay.
And that was, you know, like you say, a huge minefield. Lots and lots of things to watch out for.
Because wasn't there something going on? Was it the United Nations? For some reason, Sustainable Development Goal 17 is ringing a bell about identity or something. I'm sure there's something that the United Nations stated about identity management about 3, maybe 4 years ago. I don't know if you're familiar with that.
No, that doesn't come to mind.
Okay.
Just for reference, I'll post the link to the project that I'm involved with, which is called SPDX.
Yeah.
And that's the project which I've been working on, and it's part of the Linux Foundation, and it's an open standard. So it's an ISO standard, but you can also get it under Creative Commons license.
Okay. And where you say it's an ISO standard, because I know ISO with TC 307, is it? Technical Committee 307. They're doing stuff around distributed ledger technology standards. Does it link in with that, or is this a bit broader?
The ISO side of it's quite limited in SPDX because I don't know if you're familiar, but the Linux Foundation basically bought out a standards body in order to submit directly.
Okay.
And but as a result of that, it's only a few people involved in SPDX who have access to that side of things.
Okay. Well, it looks like there's some useful documentation. I've just shared the screen, hopefully, which shows some of the things on that. So if anyone's interested, then they can take a look at spdx.dev, I guess, which looks really useful. Thanks for sharing that. Yeah, because I don't know if you were ISO. They've got their TC 307 body, which is around standards around distributed ledger technology and blockchain. I think they're developing a number of other standards around that as well, including, I think, data standards and interoperability. So I don't know if that's something that you've also looked at as well as the open standard side of things.
Yeah, so the idea of SPDX is to be a sort of a layer. If you imagine the analogy with traditional networking, you've got layers of the network, and SPDX defines the shape and the semantics of data.
Okay. And
the thing above that could be multiple different ways of verification and transmission. In fact, you know, traditional networking analogies, you'd say it was underneath because it requires a transport layer to exist on. And we haven't chosen anything for it to use. We're making it interoperable with as much as we can, basically, and let users decide how they want to verify the contents of the data.
It's bringing back memories of the 7-layer model of network architectures or whatever, which is something I've not been near for a long, long time. So that's good. Well, thanks for sharing that, Sebastian. Always useful, and something for people if they're watching the recording afterwards, they can go and check into that. That's cool. Great. In that case, I was going to say, Aman, I know that you were on a couple of weeks ago. I can't remember where your specific interest lies in the world of crypto or blockchain.
For me, it's just blockchain and crypto in general. Just trying to learn about all the different kind of interesting projects within it, and anything which has some kind of benefit to people in general. Just interest in learning about that.
Okay. Well, it sounds like you should certainly speak to Sebastian about standards and that kind of things. And the whole thing, I think that is going to really explode is around interoperability. And when we're talking whether it's interoperability of blockchain layers, so like layer 1, layer 2, and so on, whether it's interoperability between blockchains, that's where standards is really going to come into its own, definitely. And I think where each year in blockchain and crypto, we seem to go through a hype cycle over something. I do think 2022, 2023 is going to be interoperability. And that's where standards, I think, will become critical on it. So we shall see. That's just my opinion anyway. I don't know, anyone got any other interesting news or anything they'd like to share today? JT's always got something going on.
Yeah. Well, for me, interesting this week was what's going on about the Avalanche founder, you know, and that lawyer's, the solicitor's company, you know. I don't know if you read that, Gary. Basically, apparently.
Share with us, because I've not been following Avalanche. But there's been so many things going on the last few weeks with things like 3 Arrows and Celsius and that. I didn't
so allegedly, I have to say that a few times, Avalanche founder struck a deal with a very well-known corporate lawyers company, to involved tokens. It looks like involved equity as well, you know. So quite a big deal. And they were going to go after Solana and other chains, you know, and take them to court, basically trying to destroy their companies. It's very interesting. Now, let me see if I can find the link to share here with you guys. But I mean, if this comes out to be true, it's going to be very, very interesting, the development, because it shows that it's not very nice what's going on at the moment. Yeah, I actually shared this, I think, on the Crypto EM, but let me share here again on the chat so you can have a look.
Sure, I'll pull it up as well.
Okay, that's it. Have a look. Very interesting, you know. I think this is not going to end up here, you know. I think there's going to be a lot of writing about this. People are still trying to figure out a lot of the statements in this. Yeah.
So this is on cryptoleaks.info.
Yeah.
And talking about Avalanche Labs. Okay. Yeah. SEC and an evil conspiracy, surely not.
Which the law firm Rush Friedman looks like both of them were involved, you know. I mean, there's a lot of stuff said here that is like, wow, you know, very explosive, to be honest, you know.
So they're effectively saying that Rush Friedman are being paid by somebody like Avalanche, perhaps, to go off and do some litigation in some way. Is that
yeah, it looks like it. I mean, I don't know. I don't think none of us here in the call knows about this for sure, but it looks like there's some gangster style, like it says there, operational activities from these two companies. But of course, this is all allegedly. I mean, if these guys are posting this out there, they did quite a bit of research on it, So it looks like there is some recording as well.
Okay.
Of them speaking about this, yeah.
So mindful that this is being recorded, I'll say to people, do your own research, check out the credibility of whether cryptoleaks.info is verifiable and legit, and maybe take a look at the story themselves there rather than going into something. I'm mindful that the crypto world is becoming increasingly litigious, if that's the right word. If you look at what happened, was it with Peter McCormack not so long ago? He was making
Mr.
comments.
Satoshi himself, or Faketoshi, or whatever people call him.
The pumpkin farmer, if I remember the event I was at correctly, was what he was called. So I'll suggest people to go and check that and read it and make up their own minds. But it certainly looks like an interesting story of it.
If there are really those recordings, Gary, this is going to be quite explosive. I think people are still trying to figure out, what's going on there. And that's the case. I think Solana and SBF will come big time after them, But again, all of this is allegedly, of course. We don't know.
So, Sebastian, were you going to add something?
I can't say that I can vouch for the integrity or not of the article, but I did find it amusing that the author says lawyers count the second highest proportion of psychopaths. That's an extension of the classic lawyer joke, somewhat.
I picked up on that as well when I was reading. There's some cool. I pick up on certain paragraphs that are very, very interesting.
I have to be careful, given that some of my clients are law firms. So
of course,
I'll be on good behaviour. But yes, I know about the coachload of lawyers that crashed. Blah blah blah. Which is one of the more famous ones. Or even one of the funniest was one of the law firms I was working with when we were talking about the adoption of smart contracts and it replacing legal contracts. They were one of the first to start quoting Shakespeare. Was it Henry IV or Henry V about now we will kill all the lawyers? So, and they were quite amused by it. So, anyway, okay. Well, thanks for sharing that, JC. Something for something to take away and look at, because that could certainly have another shockwave in the whole crypto space, which seems to be enough of late anyway. So.
Yeah,
yes.
I mean, absolutely. We'll have to wait and see. I'm sure there's many people digging on it at the moment.
Yeah, good one. So I'll come back and open it up again. I often say if anyone's come along to the session with any thinking about any questions they'd like to ask, I always like to make sure that we get that covered off so it gives value for those who come on. Any questions or any comments from anybody today?
I've got a question.
Go for it, Sebastian.
Yeah, as somebody who's fairly new to the crypto world from about 2016 onwards, I've mostly not read anything about it. Is Avalanche based on Ethereum?
No, it's a separate chain.
I was going to say, I think it's not one which is a fork off Ethereum, is it? It was developed from the ground up, I think. But I'm not close enough to know on that.
I saw that it supported Solidity, so I was wondering if there was a connection there.
Yeah, there's quite a few that support Solidity language. Yeah, it's not difficult to do it. There's also others who they're basically an EVM, but they did quite a lot more than having an EVM. So it can be a mix of both. But Avalanche actually managed to support Solidity, like Near in the beginning. Near the Near chain, it's actually called Near Protocol. They were also supporting Solidity, yeah, and they had an EVM and so on, but then they decided to go with Rust. Some just continue to support, others drop it. Avalanche, they support Solidity, so they can support all the dApps as well, yeah, all the Ethereum dApps.
Ah, so that's really fascinating. Thank you.
Because I guess that makes it easier. That I've seen it on a number of projects now where companies initially start exploring things using Ethereum because there's a good framework, there's good developer tools, there's a great community, and then they experience challenges with Ethereum, so they move on to something like Hyperledger. Then they have challenges with that, and then they go on to R3 and Corda or something. I guess if Avalanche have made a stake in the ground of providing Solidity platform capabilities, then it makes it easier for you to get skill sets from people who've got Ethereum experience. I wonder if that's maybe the thinking behind that.
So with Avalanche, there's a few things they've implemented, and I think that's one of the reasons that it's I think is a bit too slow for generation 3 or 4 blockchain. Yeah, so they kind of stuck with Gen 2, you know, but they have something which is called C chain, and the Avalanche C chain is kind of a default smart contract chain on Avalanche. So that means that you'll be able to create any Ethereum smart contracts on it, yeah, or ERC20. I don't know actually if they support ERC721. They probably do, you know, if they support those as well. So I mean, you can create actually a subnet, an Avalanche subnet, if you want, yeah, as well. So there's a few things they've implemented that means it's quite flexible to build on it. But with providing that flexibility, they also compromise a little bit on transactions per second, yeah, on the speed. There's always a balance, you know.
Yeah. Well, I guess the starting point is, at least if you can plug into a developer community, that's a great start. Performance and scalability is something you look at a bit further down the line once you've got something up and running.
I hope that answers the question.
Yes, it does. And it certainly sounds like having an EVM is having a VM which languages can implement is an exceptionally good idea. And you know, we've seen that from the Java world, and the Java language is somewhat falling in popularity, but it lives on with its powerful virtual machine.
Yeah, it depends really what you want to build, yeah, because for many people, having those that speed is not good enough going forward. Yeah, for now, yes, majority of stuff will work well, but if you're talking about dApps in the future and things are going to be needed quite a high throughput, you know, and we're talking about 100,000 transactions per second, you know, then for sure, you know, Avalanche is not probably the best chain to build on, yeah. So it depends on what you're trying to build. Yes, it's a proof of stake platform. Yeah, yes, allow you to create decentralized apps and smart contracts supporting, create even custom blockchains, subnets, etc. So they kind of enabled a lot of flexibility on the chain, and that's why they become quite popular very, very quickly. But people that build on it, they build for today. What I've been seeing more recently is quite an uptake on Near and Cosmos. Yeah, it looks like there's a lot of people building now some very good projects, and of course the Polkadot continues to increase. Yeah. Having said that, Ethereum is still the dominant one. Yeah, no doubt whatsoever.
I just pulled up as you're speaking there the Avalanche website, where it shows, as you say, about what it kind of offers, and certainly it looks like there's a fair amount there of interest. So again, that's something for people to take a look at. Interesting, 4,500 transactions a second is somewhat better than Ethereum, so certainly worth looking at for that, definitely. Oh, thanks, JC. Thanks for adding that, as always.
Yeah, 4.5, you know, it's a claim.
Yeah, but again, it comes back. I've had this conversation with people about what performance really means on a blockchain, and I do a fair amount of work in the insurance industry, and I was having a joke. I think on one of the forums, you might be on, JC, that in the insurance industry, you don't time transactions with a stopwatch. You time it with a calendar, because the time it takes to process a claim and all this kind of thing takes so long. So having something that transacts at 10 transactions a second for many is quite sufficient. So okay, that's good.
And all of those become very impressive when compared to traditional financial networks.
Yep. And I think that's the thing that a lot of people don't realize. Actually, a lot of traditional finance networks is actually smoke and mirrors. Because they think, oh, they put something into the mobile phone bank account app and it comes out instantly and it appears instantly, blah, blah, blah. But actually it doesn't. If you understand how a traditional finance payment works, and how you've got Nostro accounts and Vostro accounts and MTI messages, is it, going through Swift and that, it's anything but instant. But the smoke and mirrors around it makes it look instant. So a good point, Sebastian.
Yeah, the UK. So I'm saying UK is a good example, because a lot of people think that when you pay with your card, your debit card, even, not even credit card, they think, it goes to your bank and everything happens quickly. The fact is, the entire UK financial, especially on the banking side, system is actually provided by a third party that is in between. So all the banks share with that third party how much money you have in your bank account, how much credit you have on a credit card, and every X number of hours or 1 hour, whatever is updated, I think it's closer to, it's not, it used to be 24 hours. I think they reduced 1 hour. I think they reduced even further now. But the fact is, when you make a payment, it's going to just go check against that ledger. Yes, he has money, go back. The settlement is done later on. Is done, and many people don't understand, Gary. So absolutely, 100%, what you're saying is correct.
It's all smoke and mirrors to make it look
exactly.
Cool. But yeah, it's a good point, Sebastian. That things aren't always actually as fast as they look as though they are. And it's all to do with appearances in some way. If it looks quick, then people assume it is.
And your cash flow is going to have to be pretty dire if you need it to happen under a second.
Yeah.
On the other side, there are businesses that their P&L is affected tremendously if they don't have fast networks, like trading, for example. It has to have to run and read at milliseconds. Well, a lot lower than that, to be honest.
I was going to say, stock exchange trading is at microseconds now, isn't it?
Yeah, correct. So I know the guy that provides infrastructure, all the stock exchange runs on his company. Is a global company. He's a friend of mine, and he told me literally it could be millions, every hour that they lose. If you don't provide very, very, very low latency, it happens almost instantly if you do something in New York. And if you are in Hong Kong, almost instantly, I was like, wow, so it has evolved quite a lot. So it's like I said, if you're going to choose a blockchain, you have to choose one that suits to you. And if speed is something that you need, then you shouldn't go to blockchains that don't provide the necessary speed. From my perspective going forwards, I'm talking about 5 years or more, we're going to really need very, very fast blockchains, That's my opinion.
Well, I suspect we'll need very fast blockchains if there is a need to do very fast transactions on a blockchain. And that's certainly, if you're looking for open transparency and all this kind of thing, then there might be some validity to it. But it's like the whole thing, what happened with DTCC on the Australian Stock Exchange? Because that was going to happen, it's been over 2 years ago now, and it kind of faded away. And they required really low latency, high speed transactions, and it just seems to drift away. And it's almost as though maybe blockchain wasn't the right technology. What they were
at the time, yeah. I remind you how the internet used to be. People, I remember, who's going to need more than 56K on US robotics? I remember that discussion, and look where we are. It's always evolving. So I'm a true believer that if we're going to go to a decentralized world, things have to happen instantly to provide all of that traceability, security, you name it. Security is the most important one, If the systems are totally distributed, there's a blockchain that provides that transparency, traceability, security, and so on, then, to avoid anyone tampering with all of that, has to happen in real time. And the more people do it in real time, remember how many people are actually using blockchain, right? That's what I remind to everyone. There's 8 billion people on the planet. Imagine that in 5 to 10 years. You really need fast blockchains. It doesn't matter. It's not about you needing how many transactions. It's actually the ability for the blockchain to support all of those transactions. You might not need more than 1,000 transactions per second, but if Avalanche has 1 billion people on it, you will die.
I guess that's where alternate technologies that still brand themselves as blockchain inspired or a potential way. So you take a look at things like, I know in the UK there's Radix, which is a DAG-based protocol. And the great thing about DAGs is that they are so phenomenally scalable with no noticeable performance hit. And I guess that's taking us from, it's funny you're saying about the speed of the internet. I do remember dial-up modems. I remember having to couple an acoustic modem to get a phone signal to connect, blah, 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 blah type thing. And we've moved well beyond that, where now we are hyper connected. You walk around the street and you're connected to the internet type thing. So yeah.
If you're lucky. If you're lucky.
Yes.
As long as you're not in London, which seems for some reason to have internet connectivity of the third world, whereas the third world seems to be quite good these days.
So I'm interested to touch base on DAG, because the very first project that I saw building, actually providing a blockchain mix with DAG, is a Left Zero. And I became a fan of that, They are pretty good, yeah? They're based in Switzerland, regulated in Switzerland, and so on. And they are gaining an enormous traction at the moment. I think we're going to see, because they're not just trying to build a blockchain, Gary. You and I had this conversation before. A lot of the blockchains have failed because they didn't create the enterprise ecosystem that enterprise feels safe to come. With a Left Zero, you can create private smart contracts. So that's your IP stays private to you, but you can actually provide public smart contracts. And that, to me, is the type of blockchain that could potentially bring a lot of the enterprises to blockchain. And again, in terms of scalability, they are great. They can scale. But to me, I urge you guys, I'm going to paste here for you to look at this. The near night shade sharding, to me is the one that is probably the best at the moment that I've seen, because the more people come to build on the chain, the faster it will become. And that's a paradigm shift in blockchain. So it's basically, there's no limit. As it grows, it becomes faster. And I looked at this paper, and there's no bullshit there. There's a lot of things they're going to struggle, but they are building. They are already there with 100,000 transactions per second. But I think you guys need to look at a Left Zero and the Near protocol. In my perspective, those are the guys that are on the money at the moment. There's going to be new ones, of course.
Yeah.
Constantly.
I just thought I'd share the screen now on a Left Zero just to see where they're up to on the roadmap. Because are they actually live? I know they have the test net up, but have they actually got a production mainnet? Oh, looks like they have, yeah. So they got validators, blah, blah, blah. Okay. So another one to check out then, leftzero.org. And
that Near, you need to really look at Near, Gary, because that sharding is incredible, That's a good reading, Gary, because that's what triggered me. I was trying to understand who's going to win, because not all of them can survive, I think the design of this is just genius, be truly honest, I really, really like it.
Okay, so I've just pulled the near.org page up on sharding and Nightshade. Sebastian, you've got a question?
Well, yes, I need to go relatively shortly, and
okay.
I was just wondering if I could ask a practical question about the Ethereum merge.
Yeah, ask away.
So, well, in traditional proof of work, you have a mining node which can produce new, or can mint new coins in whatever blockchain cryptocurrency you're using. And if I understand correctly, it's the validators which now are responsible for minting new blocks and creating the Ethereum currency. Is that right?
I think so. I was just having a look actually at, with me, just as you were talking,
yeah,
I was...
I guess just to jump in, yeah, that will be the case.
Right, but if I also understand correctly, the proof of work is much more computationally intensive, and so the new proof of stake will be much easier for people to do. So how is this not going to cause inflation as everyone starts running validators?
I'll open that up to anyone to answer because I'm not close enough to this.
So I guess I'm not too sure if I can answer in regards to inflation, but I guess just to explain the mechanism of how it would work is, I guess with proof of work, you can see it as like a competition between the miners. The first person to solve the block and the computational challenges will be the first person that gets rewarded. So with proof of stake, with the validators, I believe there'll be a process where the network will select a select number of validators to carry out the consensus group. So it means that all the other validators which are not selected don't need to do any computational power during that period, and it's only the ones that are selected that have to process that block. So it will just be the same amount of Ethereum that will be minted for each block as it is before, but you need less computational power running in order to produce that new block.
So if I express that really, really simply, then the same amount of ETH is generated. It's just simply that the cost of producing that ETH is lower.
Yeah, exactly.
Yeah. So there shouldn't be any inflation or deflation because the rate of supply is remaining unchanged.
Yeah, because I guess right now you could say there's maybe hundreds of thousands of Ethereum miners which are competing to win that block, which might be releasing 6 ETH. Whereas in the future, they might select 100 validators to carry out that process. And those 100 validators will be rewarded with that 6 ETH. And over the long term, all the validators should average the same amount of earnings based on, I guess, the setup of it. Obviously, the better set up validators will earn a bit more, and the other ones which are poorly set up will earn a bit less.
So in order to rephrase my question a bit differently, if I were using traditional Bitcoin, for instance, I would need to invest with effectively real computer hardware in order to mine Bitcoin. And in practice, I couldn't compete nowadays, given that there are specialized hardware mining operations going on. But in principle, anyone can earn new cryptocurrency without having to use an exchange. So with this, it seems as if it's much easier to create new blocks. You don't need to have specialized hardware. And so surely this means that I can create new Ethereum without the same cost as I would with proof of work?
Okay, so it's a bit different, yeah. Before the merge, I think there was about 13,000 Ethereum mining rewards, yeah, per day, yeah. And I think staking was about 1,600, yeah, per day. After the merge, only about approximately 1,600 Ethereum per day will remain, yeah? So that drops Ethereum issuance by 90%. Initially, it will be deflationary, yeah? That's what people are hoping, but increasingly it will be inflationary. The other side, yeah, is that there's a burn, yeah? There's about 1,600 Ethereum that is burning is going to be burned every day. Yeah. So it means really that Ethereum inflation brings really the Ethereum inflation to zero. Yeah. After merge. So there's a lot of dynamics here that they try to balance, but in essence, I think there's going to be, it looks like from what they have proposed, there's going to be less Ethereum issued. Yeah. It's going to be deflationary. But there's a process there that if it becomes inflationary, then there's Ethereum that is burned. Yeah, that's my understanding.
So let's just flush that out very, very quickly just before we finish that. So at the moment, a block is created in Ethereum. I think it's every 15 seconds or something now, isn't it? So there's just under 6,000 blocks a day created. I presume under proof of stake, the speed taken to create a block will remain the same. So there won't be more blocks being produced per day or less blocks produced per day, will there? It's just the different methodologies being used to validate. Is that right? Or are we all going to have to go away and read the paperwork?
I don't recall, to be truly honest. I read this a while back. Okay. I don't recall the exact numbers. But I think before the merge, you're right, it was nearly 15 seconds between, I don't know, 12 and 15, I think, yeah?
Yep.
And there was about, I think, around 2 Ethereum issued, yeah? So there was approximately about, I'll say, nearly 5 million Ethereum issued a year, yeah? I think post-merge, it's going to be different, yeah? I can't remember the numbers, yeah? But it's going to be different, yeah? I think the annual issuance rate, I think, is going to be around 0.5% of the total Ethereum supply, which is different, yeah?
Okay, so I've just pulled a quick report up, and I don't know how up-to-date or accurate this is that it's talking about after the merge, the speed at which a block will be created will decrease by about a second or so.
So the net reduction of annual Ethereum issuance is going to be about 90% reduced, yeah?
Okay.
So there's not going to be the same issuance of Ethereum every year. So there's going to be a lot less of Ethereum. Before the merge, it is about almost 5 million Ethereum, yeah? Okay. Issued every year. So you do 90% of now for about only 500,000 Ethereum is going to be issued every year.
So Sebastian, probably the ultimate answer to your question is that we all need to go and find out.
Yes, this can get very complex, which is one of the reasons why I kind of...
Okay, I got you a link. Yeah, let me just go. It was on my... Let me just go on my bookmarks. What I read. I read this. I posted the link. I read this a while back. So I think it has all of the numbers there, yeah? It's impossible to keep all the numbers in your brain, you know, but that's pretty much.
All right, thank you very much.
There we go. So there's a couple of things on there. So it says after the merge, only 1,600 ETH a day will remain, dropping new issuance by 90%. So that is going to be quite a significant drop. But again, as I keep arguing to people about demand and supply and basic economics, it doesn't matter what you do to supply if there is a change corresponding in demand as well. So we'll see on that. Folks, we're going to have to close it off at that point. A really interesting point, but I'm just mindful of the time that the day has flown by. Just want to thank everyone who's joined us today. And for anyone who's listening, hope you've enjoyed it. Do come again next week, folks, 7 p.m. every week. Open to everybody. I hope you found it of interest and of you. So have a great day, folks.
Thank you. Bye.
Thank you.
Thank you, guys. Bye.
Cheers.